here we go. On a weekly chart on the Dow, you can take a look down here, MMT. Since we called this low a week ago, we got down to that 10.4 handle. We had undercut the 10.5 handle. That 10.5 was very important. You can see you hit my trend line over here last week, MMTs, and we've had a 7-day rally. And the 7th day of the rally is over. Week 1 of it, last week. Last week at this very time on Wednesday would have been rally day 1. Now we've made it to 7 and we made it past 5. We're above the 100 week. The 10 week is flattened out. So the bull has got a much more impressive bottom at that Lehman 10,500 collapse back in 2008. They really came back in here and we popped that baby. And the thing about it is, you got oversold, like I said. This Dow, just so you know, that 100-week moving average at 11,175. But let me tell you, when the Dow hit the low and we called for this low, MMTs, 10,400. So here, let's just write it out, the amount of 7 days we had. So we had on a weekly low, we had 10404.49 pennies. Subtract to this high here, 7 days later, the high here of it is 11,625. So minus 11,625.30 equals 1,220.81 Dow point rallies from the second calendar year low, as anticipated. That we had talked about all indexes coming down and then hitting that second low of the calendar year. But then within the major volatility here, we came right back up here. We've had that great turn. We're right back up here where we had problems before until you got a closing bar above 11.5, which technically we do by 18 handles. Why do I say that? Because we close at 11.518. So we are above this trend line that goes right back over here. Here's the lower trend lines that we had bounced or broke below to that low right here, to that breakout. And they are very nice breakouts for one reason. Because when I take right here, 2011 high, when this low down here, which we didn't get to, but we got here where the breakout was on a weekly. And I'm just going to put that down there. Then I'm going to change this over here, MMTs. So basically what am I going to do is I'm going to draw you where the rally started and where we went all the way in this calendar year. And it's going to come off right in here. I'll get it right there. And it's right there. This is when the rally, the long-term rally back in 2010 lows down here on the Dow was down in this neighborhood. When we really broke higher, we broke from that 10.4 handle exactly where we tested it. And the thing about it is, if I come up that same low where that started, I can come right over here, and this was the second calendar year breaking point of 2012, as you know, because you were here. I could come up the very same point of that rally, and I can come right through here now. Right there with that diagonal trend line, all stemming from these lows. Major reversals up here, all the way down to here, but nonetheless, we're hitting the upper end of this diagonal line, and that horizontal trend line is that we have closed above it. The bullish thing for the bull is the 10-week flattened out. You closed above the 100-week. And let's take a look, though. The 100-week moving average, 11,175, and they went and the shorts covered right through it, and the bull that sustained the bull move up to this current level. And we're in an earnings season. It's 10/12/2011. All of the austerity, all of the problems in Europe in their minds are taken care of. What contributed to the 7-day rally at the low was that the U.S. economy is no longer in threat of a recession. And this was part of this 2-week bull rally, 7-day bull rally, 1,200 points. Now, when I pull over the daily chart here, I will show you on the Dow on a daily level, and it's all public standard stuff. You can see the daily tops here, just like you could on the weekly. You can clearly see, though, that right here where the bottoms were in, because this is where that bottom was, right here, we have gone 1, 2, 3, 4, 5, 6, 7 days up to resistance. Until there is a closing bar above, and we have closed above it. This is that secondary, we are above it, resistance 1 and 2. So this is the major top. Until the Dow has a closing price above 11.7, you're not going to see the 200-week moving averages on a dailies up here at 1200, and the 100-day moving average is crossed over. Okay, and these are the term of the long period of where these tops were in the calendar year, way up here. And this is a bull rally with no recession. Everything's good bank, bad bank in Europe. Everything is good. It's okay that the economy grows at a lower rate in their view, and the bull is trying to catch up. The bull was taken down very hard during the year. I will tell you, for us, we have taken every one of these long days and short days, daily, it doesn't matter. This is the more impressive one, though, of the year-end calendar October low in red October. You got a great 7-day rally. Why? Because the bull had to put money to work at the calendar low. Again, just like they did at 1101. When it got to 1075, we got a great rally. We had great rallies here. 5 days up. Here, 1, 2, 3, 4, 5, 6, 7, 8 days up here to the top, and we reversed up here before. The thing about the bull, MMT, is it's lingering in the bull's mind as we play the chess game with the bull and the bear, is that in the bull's mind, they're still scared to death. They've had a 7-day rally, but for the calendar year, any one of these rallies have failed. And selling into them, as we have said it. We have traded it live every single day. There's nothing missing here. So, MMTs, let me show you something. It's part of this trend. This area right here, where we went down and made those calendar lows here, and I'm going to draw a trend line. There it is. That's it. You got down here in the knife hook low. You can clearly see on the daily how the volatility, both up volatility, down volatility, up rally volatilities, and we have another one on 7 days. This one's much more impressive. It's a 1220.81 penny rally off of that calendar low 7 days ago, and we're about to pop a daily buy signal. Now we need to see the bull move off, and we're going to see what happens up here. And not only that, until you can consolidate above these upper trend lines right here, that's this one up here, you can consolidate on a daily level and close above the 200-day simple moving average, sell into every rally. Earnings season is starting tomorrow with Google. It will all come clear to you. Sell into the rallies as they go. Once they finally start a reversal like this, or another reversal like this, or any kind of reversals, is that will take the bull rally for as long as it goes.